Tonight we delve into the story of Banco Filipino, a name that once resonated with hope for the ordinary Filipino. It was more than just a bank. It was a symbol of possibility, a place where dreams could begin for countless families across the nation. It promised a different kind of banking, one that understood the common Tao. Banco Filipino aimed to break barriers, making financial services accessible to those who had long been overlooked by traditional banks. In 1964, Banco Filipino Savings and Mortgage Bank emerged with a clear vision: to be the bank for every Juan and Maria. Its founders believed that every Filipino deserved a chance to save, to borrow, and to build a future. Not just for the wealthy or big corporations, but for families, small savers, and those aspiring for a better life. It opened its doors to sari-sari store owners, teachers, and workers, people who formed the backbone of the country. This was more than a business strategy. It felt like a mission to empower and include. The bank's presence in communities brought a sense of belonging and trust. Banco Filipino positioned itself as a friend to the Filipino family, speaking their language and understanding their needs. It was a place where customers were greeted by name and their stories mattered. It encouraged savings, no matter how small, and offered hope for home ownership through accessible mortgage loans. Even the smallest deposit was celebrated, reinforcing the idea that every peso counted. This grassroots focus was revolutionary, quickly capturing the trust of the public. Communities rallied around their local branches, seeing them as pillars of support. People saw it as a partner in their dreams, not just another financial institution. It became a trusted companion on the journey toward a better life. It became a symbol of financial inclusion long before the term became popular. Banco Filipino's branches became gathering places where aspirations were nurtured. Banco Filipino tapped into a deep need for a banking partner that felt truly Filipino. It reflected the hopes, struggles, and resilience of the people it served. Its early years were marked by a profound connection with the masses. The bank's lobbies buzzed with life, filled with stories of sacrifice and ambition. This connection fueled its incredible rise. Branches sprouted across provinces, each one a testament to the trust it had earned. But every rise faces challenges. No story of success is without its share of trials and uncertainty. The story of Banco Filipino is filled with dramatic turns. It would soon face storms that would test its very foundation. It started as a beacon of hope. For many, it was the first step toward a brighter tomorrow. It became a household name. Generations would come to know and trust the Banco Filipino brand. But as we'll see, its journey was far from smooth. The path ahead would be marked by both triumph and turmoil. The dawn of an era would soon give way to storm clouds on the horizon, setting the stage for a story of resilience, challenge, and the enduring Filipino spirit. Banco Filipino didn't just dream, it acted. From its earliest days, the bank set out to redefine what banking could mean for ordinary Filipinos. Its growth was meteoric, driven by a spirit of innovation and a relentless push for expansion that few could match at the time. The bank introduced longer banking hours and Saturday banking, radical ideas at the time, making financial services more accessible than ever before. It pioneered accessible housing loans, making homeownership possible for many families who once thought it out of reach. Banco Filipino wasn't content with just a few branches. It aimed to be everywhere, reaching communities large and small across the nation. It expanded into provincial cities and towns, bringing banking to the people and bridging the gap between urban and rural areas. Each new branch reinforced its image as the people's bank, a trusted partner in every community it served. This customer-centric approach paid off, earning the loyalty and trust of generations of Filipinos. Banco Filipino mobilized savings from a broad segment of the population and financed countless homes, helping dreams come true for thousands. It became a household name, synonymous with accessible and friendly banking, a brand that families could rely on. For a time, it seemed unstoppable, with its reputation and reach growing stronger every year. The bank understood the pulse of the nation, adapting to the needs and aspirations of its people. Its network grew, and so did its influence, shaping the way Filipinos thought about banking. Banco Filipino soared high, etching its name into Philippine banking history as a true pioneer. But rapid growth would soon bring new challenges, testing the very foundation of its success. As the 1970s turned into the 1980s, the Philippine economy faced turbulence, political instability, inflation, and economic headwinds. Banco Filipino, despite its popularity, was not immune. Whispers of trouble began to surface, accusations of fraud and financial mismanagement. The bank's rapid expansion strained its internal controls. Reports suggested some lending practices were risky, exposing the bank to greater danger. The aggressive pursuit of growth, if unchecked, can lead to increased risk. Public trust began to erode. Confidence, once lost, is hard to regain. The cracks widened as rumors grew. The bank that soared so high was now facing turbulence. The storm clouds gathered. A major crisis was looming for Banco Filipino. The foundation was no longer as solid as it once seemed. In 1985, the storm finally broke. The central bank ordered Banco Filipino's closure, sending shockwaves through the country's financial landscape. Millions of depositors were left stunned and fearful as their trusted bank suddenly shut its doors, leaving their savings in limbo and their futures uncertain. The official reasons given were insolvency and unsafe banking practices, accusations that shook public confidence in the entire banking sector. The aftermath was chaos. Depositors desperate for answers, scenes of anguish and confusion at branches across the country. The closure sent shockwaves through the banking system, raising urgent questions about oversight, regulation, and the stability of other institutions. Banco Filipino's owners denied the allegations and launched a fierce legal battle, determined to clear their name and restore the bank's reputation. The case dragged on for years, creating uncertainty for employees, depositors, and the entire financial community. In 1991, the Supreme Court ruled the closure illegal, offering hope for a comeback and a chance to right past wrongs. By 1994, Banco Filipino reopened its doors after nearly a decade, welcoming back old customers and inviting new ones. It was a dramatic return, a testament to the owner's tenacity and the resilience of those who believed in the bank's future. But beneath the celebrations, doubts lingered. Could Banco Filipino truly rise from the ashes and regain its former glory? Old problems and unresolved issues still lingered beneath the surface, threatening to undermine the comeback. The bank's future was uncertain, and many wondered if it could truly recover or if history would repeat itself. The comeback was celebrated by many, but doubts and skepticism remained, casting a shadow over the bank's new beginning. The question lingered. Would history repeat itself, or would Banco Filipino finally break free from its troubled past? The next chapter would reveal if the hard lessons of the past had truly been learned, or if the same mistakes would be made again. The story of Banco Filipino was far from over, and the nation watched closely, hoping for a different ending this time. Banco Filipino's 1994 reopening brought hope, but also skepticism. The banking landscape had changed, competition was fiercer, and the past cast a long shadow. Familiar problems soon resurfaced, questionable loans and claims of mismanagement. The Banco Central ng Pilipinas scrutinized the bank closely. Disputes over regulations and financial assistance created constant conflict. The bank accused the BSP of harassment. The BSP insisted it was protecting depositors. This adversarial relationship created instability. Banco Filipino struggled to regain profitability and raise capital. Legacy issues and new challenges made recovery difficult. The dream of a triumphant return faded. Instead of a fresh start, old battles continued. The path looked dangerously familiar. The bank was once again heading toward a precipice. In March 2011, the inevitable happened. The BSP ordered Banco Filipino's closure once more. The reasons: continuous losses, inability to meet obligations, and impaired capital. A catastrophic bank run signaled a total loss of public confidence. Management failures and unsound practices were again at the center. The BSP cited unsafe loans to related interests as a key issue. The closure was framed as necessary to protect the financial system and depositors. The Philippine Deposit Insurance Corporation stepped in to provide a safety net. Banco Filipino's second life ended in disappointment. The same mistakes had led to the same tragic result. The People's Bank was gone, this time for good. The story had come full circle, but the consequences were all too real. When a bank collapses, it's not just numbers, it's people. The 2011 closure left thousands of depositors in limbo, many of them ordinary Filipinos. Access to their savings was suddenly cut off, causing stress and uncertainty. The PDIC covered insured deposits, but those with larger amounts faced long waits and possible losses. Employees lost their jobs overnight, plunging families into financial insecurity. The closure's impact rippled through communities and small businesses. The void left by Banco Filipino was more than financial, it was deeply personal. The human cost was devastating. Dreams were put on hold or shattered. The responsibility of banks to safeguard people's futures became painfully clear. When that trust is broken, the consequences are far-reaching. The collapse was a stark reminder of what's at stake. The fallout would be felt for years to come. Even after the 2011 closure, legal battles raged on. Banco Filipino's owners challenged the BSP in court, seeking another reversal. But the court sided with the BSP, affirming the closure as legal and necessary. By 2022, the legal saga ended. No more hope for revival. The PDIC began liquidating the bank's assets to pay creditors and depositors. Liquidation marked the final act in Banco Filipino's story. The once mighty People's Bank was being dismantled. For former depositors and owners, it was a bitter end. The saga that spanned decades had reached its conclusion. The final chapter was written. No third act, no comeback. Banco Filipino's story is a cautionary tale for bankers, regulators, and the public. Unchecked ambition and rapid growth without strong foundations can be perilous. Strong, independent regulatory oversight is essential to protect the public. Banks hold people's trust and life savings. This responsibility is sacred. The saga highlights the need for decisive action when institutions falter. Trust is the bedrock of banking. Once broken, it's hard to rebuild. Integrity, transparency, and sound governance are non-negotiable. Banking is about people, their dreams, their futures. The fall of a bank has real human consequences. The lessons from Banco Filipino must not be forgotten. They should guide how we bank, how we regulate, and how we protect the public. Only by learning from the past can we prevent future heartbreak. That is the bottom line.